Okay, so we've got German IFO business climate coming out of Germany. It's a monthly indicator. It's a very timely indicator. It's May right now, and it's coming out for the months of May. Now, as you know, Germans are very technical and very sophisticated, but at the same time simple people. So this particular indicator is measured by a private institute in Germany, but as we know, most Eurozone indicators do not have any integrity. They usually leak, and that's why they're basically untradeable. But German indicators, this particular one and most others, do have integrity, and they are released in the lockup at the proper time. So usually when we see moves in the Euro USD, there's really only two German indicators that really matter a lot, and that's the German IFO, which is by far, I would say, the most important one, which is this one. And then we also have German ZU, but multiple choice parts. They ask them, how are you doing right now? Are you doing well? Are you doing satisfactory? Are you doing poor? And then they ask them second question. How do you think your business will be doing in the next 3 months? Do you think it'll be better? Do you think it'll be the same as now? Or do you think it'll be worse? So, very simple survey. Usually most of the people answer it. And that's how they create the German IFO index. Now the German IFO index has 3 parts. It has IFO current assessment, okay, and remember, that's a survey where they ask them, well, how's your business doing now? That's a current assessment. Then they have IFO expectations, which is a second survey basically says, how do you think your business will do in the next 3 months? And they have the business climate. And business climate is a combination of assessment and expectations. Okay? Now, under normal circumstances, we really do not want any of these reports to conflict. But if it does so happen that they conflict, if it does so happen that they conflict, what could the biggest conflict could be is if the business climate comes out better than expected, while the expectations comes out worse. That's the worst conflict. If the business climate comes out better and the expectations come out better, but the current assessment comes out a little worse, that's no big deal. The expectations by far is the most important component, but the business climate, because it covers the most, usually gets all the attention. Okay? So as you can see here, I have 2 levels of triggers set in the on the trade plan. Expectations is 108.8, prior at 108.6, and by the way, prior reading of 108.6 set the record. So basically they are expecting 108.8, which is just slightly higher than the previous reading. Well, actually, I'm sorry, the record was set in December at 108.7. So they are expecting 108.8, which would be slighter than the previous record set in December. And if it does come out at 108.8 or higher, it's kind of already priced in, more or less. We want a significant deviation, and we want to make sure none of the numbers conflict. So the business climate is what we're focusing on. If the number comes out at 110 or higher, I mean 110 is a psychological level, it would be much better than expected, and I think Euro USD could go up by about 25 pips in the first maybe 15 minutes or so, 15 to 30 minutes. And for that, I'm willing to use regular 10 pips limit triggers on my MB trading. Okay, on a Wanda, that means using market orders with 3 pip bounds. Okay, If for some reason the German IFO comes out deviating by +4 or -4, it would be a huge deviation. I don't think I've ever seen such big deviation, and I think it could create a shock to the market. I think it could move the euro by 40-50 pips, and I think using regular 20 pips limit triggers could be warranted, meaning that losing my thoughts here. Yeah, regular 20 pips limit triggers may be very much warranted, because we may see a move of 40-50 pips. And that's the situation, but I really doubt that such big deviations could actually come out. So we'll have to look and see. Okay, we are coming up to about 5 minutes and 15 seconds until the report. Hey, don't go crazy on this one, okay? This one, if the deviation is not big enough, we may have a lot of opportunities to enter at perfect prices after the spike, okay? So if the number comes out slightly better or slightly worse and there's no conflicts, we may see a spike, 10 pips, 15 pips either direction, and then a full retracement. So I'll be looking for some after spike trades even if our triggers are not hit, and I'll let you know as I'm doing it. 20 seconds, 15 seconds, 10 seconds, 5 seconds, 'Still waiting. Okay, no trade. Came out at 108.6, same as previous months. Okay. So as you can see, the price is doing nothing for now. The current assessment came out lower. By 1 point actually, but the expectations also came out lower. Everything came out lower, though the actual expectations came out a little bit higher. So basically the current assessment came out lower by 1 point, expectations came out slightly higher by 0.3%, and the business climate came out 108.6 versus 108.8. Obviously, listen guys, there's nothing to catch here. The market will do what it has to do. I don't think this fundamental event will affect anything. It's too close to expectations, and it's definitely a no trade. Not even gonna try to squeeze water out of a rock. Hey guys that are using the new Stinger, the beta version, how did you like the numbers popping in and stuff? Tip my ride. Did you feel like the new Stinger was slightly faster or exactly the same or what? You like that too, Zach?